We're rocking and rolling right out of the gate.
Rocking and
I
rolling.
love it. Hello, y'all. Thank you for joining us. My name is Chris Brereton. I'm an operating partner here at MOHARA. I run the portfolio acceleration and innovation practice, which basically means I'm focused on developing a portfolio of startups in the digital infrastructure space. That looks like FinTech, climate tech, health tech. My goal really is to amplify a positive impact for people and the planet. And today, we've got a world-class panel that represents a full stack of what's changing in financial services right now. That's real-time payments, it's AI adoption, it's fraud prevention, it's open finance, and it's all the hard operational work of actually shipping technology in these regulated environments. What I'm personally excited about in this chat is that each of these panelists has a different sort of node in the ecosystem, but is deeply interconnected at the same time. So our through line today is going to be that the industry knows that AI is inevitable, but it's still super hard to determine what's implementable. And we're going to hopefully cut through the hype and have a chat about what's working, what's breaking, and what leaders need to be paying attention to if they want to deploy AI responsibly, at scale, and with real commercial impact. So with that, let's jump into panelist intros, and then I'll get us moving with an icebreaker for the whole crew. We really want to make this a true conversation, so feel free, panelists, to interrupt each other, challenge each other. Let's get rocking and rolling with intros, though. Fabrizio, let's start with you.
Thank you. Lovely to meet you all. I'm Fabrizia. I lead product at Tunic Pay. Tunic Pay is an early stage startup in the fraud detection and prevention space. Basically, we provide FSOs with payment intelligence to boost their abilities to spot scams before money leaves the actual account and damage is done. And we do that by embracing technology and AI. So very, very relevant to today's conversation. Before that, I worked for 10 years at Lloyd's Banking Group. So very different scale, very different size. I was building digital products for 23 million digitally active customers, specific leading key digital customer journeys, including KYC, change of details, and obviously, not a surprise, payments fraud interventions. So yeah, great to be here and chat about AI and fintech.
Wonderful to have you. Tom, your turn.
Hey guys, amazing to meet you. I'm Tom. I'm a partner in the FinTech team here at EY in the UK. So really lead our work with startup and scale-up stage businesses within the FinTech sector, particularly supporting in many of the business functions in regulatory risk, in finance, etc. Also responsible for our FinTech lab in Canary Wharf at EY, where we really focus on helping to connect, create, and collaborate with FinTechs.
Amazing. Welcome, welcome. Dan, your turn.
Good afternoon. So I'm Dan Pass. I am CTO of Send Technology. We're a platform provider in the large, complex commercial insurance space. And we're one of the organizations that is delivering as a service provider into that kind of side of the finance business. However, I've just spent the last 5 years in the UK building a bank, which means that I've also been the customer. So I've had the opportunity to look at the AI and the sort of regulatory landscape, both mature regulatory side, and said as a customer and as a sort of facing into the customer, and then also now being the and now flipping to the what's called the gamekeeper turned poacher, or the other way around, which is where I'm now on the service provider side, telling customers that I understand this technology and its pragmatic use.
Wonderful, wonderful. And Ben.
And thanks, Chris. So I'm Ben Blomley. I'm the co-CEO of MOHARA. We build innovative tech products that can scale, a lot of them in fintech, but much wider than that as well. So we've built fintechs from new banks through to supporting Dan with his previous bank, and others in the payment space and more broadly. Prior to that, I ran a startup, and then I had 8 years in financial services on the consultancy side. So I've seen different sides of it, and I'll be bringing the perspective of the professional services side of things today.
Wonderful, wonderful. Wow. I am legitimately intimidated by this room of y'all. So hopefully we'll have a great chat and I can guide us through it. But the way I want to start is what's the unpopular but correct view that you hold about the future of fintech right now? So unpopular but correct view in your mind about the future of fintech. I feel like Dan's got a loaded answer for this one already.
I thought you might pick on me first. I think the reality is like all things, the technology that's on front and center everyone's mind right now, which is the big AI, which is the one everyone's talking about, is going to have a necessary course correction. it's moving at an incredible pace. It's a really exciting and challenging topic, both positively and negatively. But yeah, I think the realistic is, and we all know this, that it's going to have to find a balance. It's going to have a correction. It's going to have a bit of a bubble burst, which no one wants to admit. But when we do, the real positives and what is the next generation of this technology will emerge in a way that's more mature and has learned from itself. We remember Moore's law from a technology perspective with CPU scaling. We just said, yeah, we'll just keep throwing more transistors at it. Then we'll just throw more cores at it. Then we'll throw faster pipelines to memory at it. But like all things, it reaches an apex. And it's a question of how long we take to reach that before we sort of find the limitations of the existing sort of LLMs and this kind of infrastructures. And we keep doing more tools and MCPs and all kinds of things to try and expand its capability. But at one point or other, we're just going to run out of knowledge to suck up from the internet and slightly regurgitate.
That's loaded with all kinds of things I want to unpack, but it's not my podcast. Fabrizio, what do you got?
I was going to jump in to say I tend to have a similar view to Dan's. I think AI, and we'll talk more about it today, right? Like gives opens so many doors that before were not imaginable. But it is, it still hasn't found its place and the way that it fits within the broader ecosystem and all other technologies that exist today and will exist in the future. I think, as a product person, I think customer first. I think, how do I solve a customer problem? And is AI the best way to do it? Or am I overcomplicating my life as a product person? And also as a startup, am I complicating my life to get in the door in, selling to companies that are highly regulated and have a lot of governance processes for AI? So am I shooting too far? Like, am I using a technology that is not fit for purpose? Or am I leveraging it because it is the best thing right now? So I think I feel definitely in the tech world that I live in, an unpopular opinion where we want to try and do everything with AI. I think we don't understand AI enough to be able to do that today. And I also think in the future it might not still be the right thing. I don't see a world where everything and anything is AI. Unpopular, maybe. I don't know.
No,
I think I might agree. What do you got, Tom? Ben, anything?
Well, I think sometimes people look at the fintech space and they see those venture investment numbers, that have in some ways diminished post that kind of immediate post-pandemic boom, and they sort of say, well, is fintech still super relevant? Is that a trend that's slightly run its course? I think the opposite. I think really, it's a market that's only just beginning. And we think that because, when we look at the scale of challenges we see throughout the financial services sector in pension provision, in financing for small business, and the ability of smaller merchants to accept payments cheaply and effectively, massive unmet needs. And when we look at the changes going on in the rest of society, the subscription economy, gig work, etc., and changes the way people live their lives, also massive change. And often we think fintechs are the best at kind of tapping into those changes. So I look at it and think it's really a market that is kind of only just beginning.
Yeah, sort of following on from that, the unpopular but potentially correct that I come up with AI in fintech is that I worry that scale will win and that all the benefits will flow to the incumbents. And one of the reasons why we're here is to try and help earlier stage fintechs actually compete in a landscape that is heavily biased towards those that are already there. I remember being at a conference last year, and somebody from one of the big insurance companies was saying that when they talk to startups, the startup thinks they're going to solve 75% of their problems. Whereas actually, they think the startup might solve 15% of their problems, and 50% of the problem is actually getting it integrated and embedded in the first place. And I did pulling up some stats ahead of this, and I was reading that Bank of America is already running 270 AI models across the business, and they're cutting fraud losses in a big way. And so if all the gains flow to the incumbents, we know how poor incumbents are at generally pushing those gains to end consumers and end users. Whereas it's normally the people that are more disruptive rather than kind of evolutionary in what they do that generate big gains for end users. So if all the gains flow to incumbents, they crowd out the innovation that's really happening, crowd out the actual game-changing or user-changing behavior, and that's a risk that we're seeing, I think, with AI at the moment in fintech.
Yeah, I think though you're right, and I think actually what we've got to do is wait for it to become even more commoditized and utilitized. Everything that we've done technologically in the last, well, since the beginning, has always started at a really high genesis, a really expensive point. It's only for the few and for the rich. And if you consider cloud computing is a great example of it. In the last years, it's become such a basic commodity. It's so cheap. Whereas a few years ago, probably no more than 15 years ago, we were buying physical hardware, installing it in data centers, putting virtual machines in. We were going and buying £125,000 a year licenses for database servers and thousands of pounds of maintenance for all kinds of tools. The cloud has allowed us to actually utilize that in a particular way. And obviously, the big incumbents have had machine learning models and very much, baseline neural networks and all kinds of this technology on very specialized, very expensive infrastructure for years. OpenAI in 22 said, look, chat with ChatGPT. Let me know how it goes. It created the next logical iteration where it's starting to become more commoditized. And hopefully, as I said, when it hits its apex and an element of it gets corrected and the right amount, the real bones of what's really good from this comes forwards, the ability for everybody to have it and for it to become highly democratized, which is where we always want this technology to go in the future, becomes the case. It's just when, so that it, as you said, it doesn't become still to the gratitude of the great and the few when you actually use it at scale and leverage it in every sort of dimensional way.
What do you guys think the incumbents get wrong about internal innovation versus buying innovation, and then what the startups are getting wrong about selling into the incumbents? Where do you think the mismatch is there? Or is there a mismatch? Am I just assuming there's a mismatch?
I think the mismatch is about expectations and about sort of not learning the lessons of the past. Like still, startups struggled with that. That's that divergence in the stat that I gave. Startups really struggle to understand the scale of the difficulty in integrating with an incumbent, and maybe not even just the scale of the difficulty, but like the runway required if you will get a game-changing return from working with 3 or 4 customers, but it takes you 3 years to get there. Like few people can manage the roadmap and the runway in such a way that it allows you to get there. And then you run out of money, or you become effectively an internal dev shop, or what have you. And then the flip side of it is still that rushing by smothering approach that incumbents have, whereby bigger players they squash the culture and the innovation and the kind of free spirit nature of startups by bringing in layers of compliance and oversight that just don't work for it. I still think that some of the best models is keeping innovation at real arm's length for as long as possible, and then buying it later on when it is a really sort of meaningful level rather than too early.
What do you think,
Yes, I
Fabrizio?
got.
At Tunic Pay, it's something like $1 billion annually in authorized push payment scams going on. You're selling into these incumbents, I think, if I have that right. How do you see AI changing the way the institutions are buying technology from startups like you guys?
I think this is it's a great question, and it's a great topic, because obviously I've been on the other side I've been on the other side, and I think the reality is the only way the only way that for fraud specifically we can fight against scams is through AI. But I think what Ben is saying is really, really real and really true. Having worked for a big bank, for a big enterprise where it does take longer to build those capabilities, but once you get there, you've got the scale and you've got the reach to be able to actually, adopt that technology in a meaningful way. I think the conversation around build versus buy internally for a big bank is very real. And we felt, I think most of us on this, on the panel and here in the room, virtual room, have probably had those conversations, or have felt like, you've had early stage conversations with big enterprises, with big clients. You've given them some ideas, and then they say, "Oh, thanks, but we've decided to build it internally." So I think, especially like people in the audience might have founders in the audience, or people that have been in a startup for longer than I have, as I spent most of my career in a big bank. They will definitely feel this very, very closely. But maybe what I can give you is the perspective coming from the other side. So in my view, there are probably three key areas to build a little bit on what Ben was saying as well, that banks look for specifically. Banks are our clients. The first one is expertise and strategic alignment. Banks have tons of priorities, right? And fraud is one of them. And I felt that pain, right? I was one little person in a little department in a very big bank where mine is my biggest problem, but it's not the biggest problem necessarily for the bank that has to run, I said 23 million, digitally active customers. So having a unique proposition that helps them solve a specific problem is really important, right? Like, a bank is not looking for someone that can solve every single problem. They've got an army of employees doing that, but that one specific problem that is really key and really scoped out is, I think, very important. And the other thing is that strategic alignment, right? So that specific problem needs to be aligned strategically to their priorities. Now, obviously, I'm lucky I worked in the fraud space, so I tend to know what that might be. But the reality for all of us is that banks don't buy cool tech for the sake of it. They need to buy it for a specific outcome. So specifically for us, fraud reduction, OpEx cost reduction, understanding what is important to a bank and how you can leverage technology to help them get there quicker is really important. And then secondly, I think, Ben, you've mentioned it, is integration, is easy integration, right? We're all dealing with over 300-year to 150-year, monsters, dinosaurs. It's not going to be quick and easy to integrate to them because they can't build quick and easy, right? They're going through those transformation, and probably Tom knows this even more, having that, that broader landscape, looking at a lot of players. But like they're going through migrations, they're going through infra changes, like they're going through such a big and radical, change within themselves, that if you offer them something that takes them 3 to 6 months to integrate, it's not going to do you any favor as a startup, because might not be there in 3 to 6 months, but also it's not going to help them. So they want to accelerate innovation, but having an off-the-shelf product that requires low or no integration is something that we found at Tunic Pay is really, really key, and gets that foot in the door. It's a step towards that integration, that more strategically down the line, that deeper integration. And lastly, I'd say, and then I'm sure that Tom and others have other things to say, but lastly, what I would say is the ability to bring the outside in. And I felt this very personally and moving. When you work, especially in digital, in innovation, in a bank, you think that your eyes are, peeled towards the outward world. But the reality is you're in a big enterprise. You are still quite a closed ecosystem. So the one thing that startups can bring is that outward in perspective, that we speak to a lot of banks, we speak to a lot of clients, right? So bringing that knowledge, that collective knowledge, that collaborative knowledge into the doors of a bank, I think it's really important and shouldn't be underestimated. Especially for fraud and scam prevention, creating that network effect is fundamental. Like, it's pivotal. Without that knowledge sharing, that data sharing, that information sharing, it's gonna the problem that we're trying to solve around fraud is gonna be really, really hard to face. So I'd say, yeah, these are my three takeaways. Three kind of like having been working for a big bank for 10 years, the three things that I would say are going to help and are helping us today at Tunic Pay.
Yeah, I mean, I totally agree with that characterization and with what Fabrizio and Ben have said. I think, yeah, I mean, there's kind of this view that on paper it's beautiful, isn't it? The fintechs with all their innovation and agility and digital first solution, and then the big institutions with so many customers, so many challenges, but struggle to build at pace. And of course the kind of API integrations and the technology capability does make it easier than ever. What's harder is often the governance, compliance, data sharing controls, aligned with consumer duty, etc. Yeah, I love Fabrizia's comments on those kind of top tips and focus areas. I'd maybe just add to that something around kind of trust and commitment. And I think the inevitable procurement hurdles and challenges are made so much easier with a strong and convincing senior business stakeholder who is willing to just push, and finally overcome those challenges. Because with that right support and sponsorship and kind of push, then eventually they are surmountable as obstacles. Perhaps one other thing is, and what's been a really good thing of the fintech movement is a real, it really is about partnership. It's not about a very traditional packaged software sale or a very traditional solution fit. It's often about shared commitment to solving an end customer goal and a degree of flexibility within that. So I think that the trust and commitment and that sort of shared commitment around collaborative problem solving really do make this quite an exciting time for those kind of partnership deals to have real impact.
With the partnership front, I'm thinking things like digital wallets, super apps,
Mm.
cross-border payments, all these different tools
Mm.
and solutions are exploding. What risks or regulatory blind spots do you think are introduced, especially when AI is involved at those
Yeah.
edges?
The regulators across the years have spent time trying to understand this such a significant ground shift. For years, they could literally walk into your building and say, "Show me your stuff, log on to
Right.
stuff, show me the flashing lights and things." And the emergence of the cloud, and then the heady dominance that it's got, and then the movement to more SaaS services, and this kind of delivery model that we are now in, and obviously the ability is said to be able to acquire services on a much more simplified and much more elegant nature, means that they have had to retool themselves to think about how they still understand and ensure that we are doing the right thing as providers into the space, and obviously laterally for the last 5 years as a customer. So how I'm acquiring these services and then going through that diligence. The part for them always is going to be, they're always going to have blind spots. And as technology gets adopted by us and we tell them we're adopting it, they will go, right, okay, I need to understand how that works. And those who worked with some of the industry bodies, people like UK Finance know well, they have constantly tried to see what's happening, try to understand it, try to be, I think, remarkably pragmatic, actually. You would think a regulator wouldn't be, but actually regulators are quite pragmatic. They're trying to make sure that they don't block innovation. They do actually want you to, they do want organizations to be successful, but they want you to really consider what your foundational principles are. And I know from as a bank, when we're dual regulated, it's already been said about, it's about consumer beauty, operational resilience, cyber resilience, third-party supply management. We all have seen what's happened this year with large non-regulated entities who unfortunately have been a victim of significant supply chain effect and attacks. It makes sense then that they still want you to be able to demonstrate and have all those, while saying, yes, please feel, try and be innovative, try and provide better solutions to customers, create better value. And I think then to dovetail that, as someone who's now working for a provider within the fintech and the insurance tech space, it's important to really understand your customers' challenges within the regulatory horizon. Who are the regulators? What geographic regions do they operate in? What is their client base ultimately? What other parts of their supply chain look like? Going into the space, understanding it as deeply as organizations like we do is fundamental, because that means we can have a real world conversation. We can emphasize, we can have empathy for their challenges. We can structure solutions that make sense to them, and those blind spots that they know they're going to have around emerging technology like AI and others, we have a compelling case. We have a description. We have something that we can help them understand and theorize. And if they go back and have auditory challenges in the future, they go, actually, they stayed on the right side of it. They gave us a little bit of explainability. They explained how the model worked. They did this. They put it through these guardrails, etc. We didn't just go in and sell them a solution that's got these bells and whistles and it's automation this and AI that and documentation and automation here. We've actually gone in with a contextual ability to explain it. And I think anyone who works in that space really needs to put themselves in that customer shoe and say, if I was approached, what would I want them to be explained to me? Not just a fancy problem solving, productivity improving, money saving, etc., but also that it can be delivered with confidence and can make sense. And I said, from being a bank for 5 years, and certainly the MOHARA team can attest to, we set an incredibly high expectation of third parties delivering into us. and fintech providers like MOHARA. And it was absolutely important that we had people who would not put us in a position that would compromise any of those foundational principles. So I guess I'm quite lucky. I'm able to sit on both sides of the fence in the last couple of
Yeah.
months and make sure that it's a very dear topic, and it's a complicated one.
I love that lens of thinking about the regulator as caring about the end customer or the client. And that's something I think oftentimes in startup mode, you're like, regulator, walls, blockers, I got to get around these things. But if you
No,
anchor them
but
back to
just
the consumer protection and the user that you're trying to support, I think that's really
yeah,
beautiful lens.
it's you. That's the thing. That's the part we've all got to
Hmm.
remember. It's always easy to sit and go, regulators stop this, they stop that. No, they're protecting us as citizens of all the countries. We may not
Yeah.
necessarily agree sometimes because it creates hoops and things we need to do and responsibilities that we have to have. But they are ultimately, and I know it seems weird to be defending them, but to some people's ears, but actually they're defending us as citizens to make sure that we have the best chance that the people who are looking after our data and our money and our financial stability and all the different requisite elements are properly considered. And it's not just somebody's, I'm going to deliver a solution and banks are going to buy it and it's going to be great. And they're going, no, hang on, you're just going to make sure this is good. This has got longevity, it's got availability, it's not resilience, and it's not going to something that's going to suddenly disappear and cause a significant challenge. And for those who are following narratives right now around critical service providers, that's what they're doing for people like Azure and AWS. These things are they are now looking at these people, these CSPs, and saying, you have a moral responsibility and an ethical and a legal and a regulatory responsibility for the customers who build on top of your platform, whether they're suppliers into the space like us and MOHARA or end customers such as Tom and services that people like Fabrizio are building to insert themselves into a broader ecosystem. And I know that's, again, it's quite a strong topic, but it's all about us ultimately. It really is.
I love it. I love it. One of my favorite Benisms is a product is defined as an outcome for a user based in technologies. I think what you say, or
Mhm.
maybe I'm paraphrasing a bit. What does that look like now that we're on the user and the regulatory lens here? What does it look like when the outcome based in the technology involves a tremendous amount of risk, moving people's money and trust?
Yeah, I mean it is a benefit. I think I'll probably paraphrase it from somebody else, but trying to just narrow down what people think about when product. You're trying to get somewhere through technology, and I don't think that changes. To link into what Dan was saying. So in the fintech space, that doesn't change, but it's just more of a complex sort of ecosystem. So if you're talking about risk, money, movement, trust. What does change is what good looks like and who we count as the user. So, if I can say I can book a taxi in 2 taps in consumer apps in financial services to link to Fabrizio, that might be my payment arrives instantly and I don't get hit by fraud or arbitrary declines. So the fundamentals of product for me still apply. You've got to start with the jobs to be done, design the technology around that, but your sort of user group in inverted commas expands. So it's not just the customer and the internal team or the customer and the taxi that's coming, but also people that are linked to that outcome. So risk, compliance, internal audit, and through extension the regulator. So thinking of trust and compliance as part of the outcome is really critical. So when you're building AI into these kind of systems and thinking about how AI can be part of an outcome for a user in a fintech. Firstly, it's got to be effective. We see lots of places where AI is being crowbarred into a conversation, but actually, does it need to be in there? To the other points that Dan and others have said, this concept of being explainable and auditable by design. So if it can't be explained, it shouldn't be in the process really, and the user group that you're solving for wouldn't be comfortable if you were not able to explain what the outcomes were. And then safe and controllable. We're seeing the start of mass agentic AI based hacks these days. Anthropic reported one a few weeks ago that they detected in September, and agentic workflows are just going to create a tidal wave of potential attacks onto systems, and fintechs, financial services firms are going to be at the forefront of that because of the number of touch points and because of the amount of data that they're processing. So, just to kind of bring it all back, like being regulator aligned from day one as part of that outcome for a user in technology, I think is really critical. You can still innovate aggressively, but making sure that you're aware of the wider ecosystem as you're going through it.
Where do you guys think AI is currently creating real leverage, and where do you think it's just veneer for weak product? Feel like we're scratching that surface in some of these answers, but I'm curious what you guys think specifically about where's the actual leverage today.
There's always going to be a group of people who are just putting a wrapper around an existing service. If you think about the very early days when the OpenAI's APIs first became available, a whole bunch of people just bought apps that was just wrappers around it. You could just go to the App Store, and a lot of those things, this kind of things, still exist. There's especially in the commercial app space with App Store stuff, there's lots and lots of things where they're just kind of, it's a little shiny button with some sparkles on it, and if you press it, it'll summarize stuff that you do. I think it adds value if they themselves think from a customer experience, it just adds a bit of delight. Is it quite surface level? Quite possibly. Is it particularly agentic or Gen AI? Not massively, but there's a big glut of that naturally because it's relatively easy, and with a bit of management, it's quite cost controlled. Where I think it's probably where that sits from a bit throwaway perhaps, and that's not to say people's ideas aren't, but yeah, possibly that's the slightly controversial response, probably.
I think
for me,
sorry, no, go ahead.
I was just going to say that I always talk about these kind of boring but difficult tasks that people have. And it's sort of a modified Eisenhower matrix type thing. But the idea is in any kind of context in your personal life and what have you, you have boring but difficult jobs. And they're the ones that, unless you're forced to do it or you pay somebody, to sit on your to-do list, like something you can't digest or what have you. I'll do that next week. I'll do that next week. And financial services is littered with boring but difficult jobs because the weight of KYC, AML type things, all the documentation, all the evidencing, and what have you, is very, very real, and you need to do it. But I think one of the reasons why people get paid so much in financial services is because there's a lot of boring but difficult jobs. So having to pay people more to actually go and do it. And just one example, again, when I was doing some of the background for this, I saw that the Bank of Singapore has got what they call a source of wealth assistant, and they've rolled it out to be part of their processes for relationship managers. And where these RMs used to spend like up to 10 days manually reviewing hundreds of documents and writing a memo, now they've got AI to do it, and it takes about an hour. And so, from a product perspective, that's gold. Like, you're freeing up these expensive specialists from copy paste compliance, and you're not delegating all the responsibility to the AI. The good RMs are the ones that are able to process the information and make the decisions. But you're creating the junior analysts that we know AI is good at, and you're applying them to the bulk of the work that happens in financial services firms. Quite boring but difficult jobs. So it's less about the what AI is. It's about the problems that it's being applied to. I think is the most value.
Love it. Fabricia, you were rudely interrupted by Ben.
No, we spoke at the same time. Yeah, I was gonna go back. So I agree with Ben. Internal operations and cost opportunities. AI, I do think, has a real impact there. But probably going back to what Dan was saying around, I have probably a slightly different take compared to what Dan shared, which is at least in my world, looking at fraud prevention and detection, AI can be a wrapper. And I think I mentioned earlier, I'm not a fan of that. I think there's the right technology for each product and use case, but AI does give a great opportunity in this space to regain some regain some advantage against the fraudsters, the scammers, the people that we're trying to fight against. Ben mentioned it with the Anthropic example around the cyber espionage, like driven by AI, but like fraudsters, scammers are using AI. Right. So the only way that we can level the playing field is by using AI to defeat them, to try to catch them. The reality in this space is that even before AI, fraudsters have always been one step ahead. I think we've mentioned the regulator quite a bit already, but especially in the UK, we are lucky enough that I agree with Dan. The regulator has always had the customer at the heart, and in the past 5 to 10 years, there've been loads of interventions to try to be one step ahead compared to the fraudsters that have been driven by the regulator. But the reality, sadly, is that fraudsters circumvented them, right? One great example is confirmation of pay. Great initiative, a step in the right direction with data sharing and across banks in the industry. But the reality is, and sorry for those who didn't know, in the UK we have a confirmation around name, so-called account number matching, which is given to the user when they make a payment, saying yes, these details match, or no, these details don't match. This is a business account, not a personal account, etc. But the reality is, fraudsters bypass this completely. It probably stopped them or slowed them down for a millisecond, and now they've simply crafted smarter social engineering ways of bypassing it, so much that most fraud comes through cop matches. So that little tick right now, if anything, it's misleading. It's like giving the user a false sense of reassurance, being like you're paying the right person, but you're not, you're being scammed. So I think the reality is AI gives us the opportunity to have a fair fight with scammers. We are already seeing, as I mentioned, deepfake being used, AI generated, content being used. It completely reduces the cost and increases the scale of scammers to be able to reach more people at the same time in different languages. So I think the only way is to ride the wave and leverage the wave, not just wrap our products with AI just because it's sexy, it's hot, and that's what we want to sell. The only way that we can do this is by finding behavioral patterns, detecting AI generated content, understanding much more about the context of the payment, the why the payment is done. And one thing that is very key to me as a product person in this space, and I think sometimes it's forgotten, is fraud detection and prevention is not only telling the customer when they're at risk, but also telling them when they're not at risk. And I think AI gives us that opportunity, giving that actual validation of green tick, you're good to go, versus no, wait a moment, these specific reasons, the document that you've just sent me was generated with AI, not saying, there's loads of scams around there, be careful, Black Friday, be careful, purchase scams. That means nothing, right? But telling you this document was forged, this document was tampered with, this document was AI generated, that video or that person that you were talking to was a deep fake. These things matter, these things bring to life and show the users what matters. So a bit of a long story short, but I do believe that AI in my space is not just a wrapper and should be leveraged to level the playing field.
There's some killer sound bites in there. We'll have to get those into short edits for you.
Love that.
I've got to ask, as the American on the call, how do y'all feel about stable coins and that movement and what that's going to mean for global payments and finance and different currencies and how that will all be affected in the process? We haven't talked at all about crypto on this call, which I'm surprised by.
I kind of feel like it's the fastest moving of those kind of possible paradigms of the future of money. We've done a kind of survey recently that I showed. I think about 8% of corporates had transacted in stablecoin globally, according to our survey, but it was like north of 50%, anticipated they might do so in the next sort of 6 to 12 months. And inevitably, these things don't always run quite as quickly as people say they might happen in surveys, but nonetheless, it feels pretty rapid. In that survey work, it was kind of cross-border payments, to pay suppliers that were at the top of the list of that. You can pay your EY fees in the US in stablecoin if you so wish. Not here in the UK yet, but who knows? Hopefully we can work on that soon. I think it brings quite an exciting vision of the future of money, in which many of those kind of benefits from the crypto landscape, where you could have like programmable payments, or atomic settlement of a payment in a kind of payment versus delivery scenario, or the ability to lock a transaction without using a solicitor's kind of client money account to achieve that. You could achieve a similar outcome programmatically. Kind of opens up really a wealth of opportunities in mainstream financial services to to kind of innovate on the future of money. It's clear that the direction of travel here in the UK is that regulations coming to stablecoins soon as well. I guess largely catalyzed by what's happened in the US, and I think what's exciting about the stablecoin space is you see that power of entrepreneurialism. You see, people who just see challenges and unmet customer needs and pain points in the payments market. And it won't necessarily be the incumbents who innovate most quickly, but it'll be new players who really want to embrace those opportunities to innovate using that new technology. So, I guess I'm pretty glass half full about that trend.
So what you're saying is we all need to really be thinking about creating a cloud-based stable coin that's powered by AI.
Yeah, let's go for it. I think this is new business. I think the AI piece sort of enhances on top of that, doesn't it? I think that the stablecoin on its own provides significant new rail and new capability. But when you add all the data and the sort of rich capability goes with that, and you apply kind of agentic capability into the payment space as well, suddenly you start to see this world where people powering those agentic payments. There's going to be a great opportunity there, as well as we all employ hopefully not an army, but at least a small handful of agents kind of on our behalf, making life easier.
I think in the US, the thought process is largely hidden, but how do we keep the dollar dominance, and can we use stable coins as a way to circumvent central banks and other currencies? And that's the scary but also sort of exciting part of where I think that stuff is going. But I found a paper recently that the EU put out around how they're essentially afraid of that exact thing happening. So I'll have to share it with you guys after the call. Maybe we'll make it available in a link to this. But Ritia, that stablecoin stuff is a whole new level of scam. Anything on your guys' radar there?
Yeah, I think I have a probably different take to what's been said, in the sense that one of the by value, sorry, the biggest scams in the UK definitely and globally is investment, and crypto has opened the floodgates when it comes to scams, and it's something that we're working on very, very closely, very, very attentively here at Tunic Pay to keep up with, as I was saying earlier, not just technology. AI obviously gives a great opportunity for scammers, but also crypto or new payment rails offer abilities to increase the threats that we need to be aware of. And I think from a crypto perspective, I think it's very interesting the take that banks have when it comes to moving money to crypto wallets, because what probably you all have felt as users of those banking apps is they tend to have a pretty blanket approach, right? Like, oh, this is crypto, it's not going out. And as a user, you have no way of moving your money to a crypto wallet, whether it's a scam or not a scam. So one of the things that, kind of like echoing what I was saying earlier, I think the key here is helping banks, and it's one of the things that we're really pushing for at Tunic Pay, helping banks discern between what's genuine and what's not, because especially in this new space of crypto and crypto investments, there is nothing there is no historical data, there is nothing that banks can use, or there's very little historical data that can be used to understand and risk assess that transaction. So that's where I think the payment intelligence that we're building, thanks to obviously AI and the new technology, is allowing us to further detect, further help banks to detect and discern between genuine and not. And I think for me, what's very important from a product perspective is ultimately allowing the user to do what they want to do, and they should be doing by moving their money freely, but at the same time respecting accepting like that banks are highly regulated. I've worked for a bank for a long time, so I understand that they have a duty and a responsibility that is not just regulated. I think in a lot of UK banks, at least, it comes intrinsically from, you know, the mission and the values that the bank has to protect the customers. And it's finding that balance between, you know, over alerting and not alerting enough that I think has had strong reputational damage for banks as well. So that's kind of like my take on crypto and my take on it. It's increased the threat. So thank you so much. But I think the key here, like with every other scam type that we're dealing with, is finding that balance to support banks.
Love it. Thank you for that. With that, we're at just about 10 minutes left on the call, so we want to open up the floor to some Q&A. Luke, I think you've got a handful of those in view on your screen. Mind reading off?
Yes. And once again, thanks to all the panelists. It's been a really, really interesting hour. Moving from the bottom up and Candy, I believe it is. If you have anything in addition to the question in the chat to add, feel free to jump in. But generally to the panel, in addition to retail banking, will AI and crypto overwhelm the market? Feel free to jump in, whoever has thoughts.
Overwhelming is a very strong word. So I think we have to look at it and say, from a general perspective, everything that's come before it was said that was going to overwhelm it at some point. It said earlier, it's like everything. It will find a correction. It'll find the use cases that people stick to, that people find positive and, you know, get really good outcomes. That massive productivity example that was given earlier, for example, it will find that. There'll be some stuff that will get shaken out, like all these technology does, and over a period of time, it'll find its balance. I think the reality is any technology that's been we've talked about in the last 50 years has always had the potential to overwhelm something, but as human beings, we always end up going, well, there's always a limit. There's always an element of it you don't trust. There's always a fine line. And unless we want to start living out the remainder of Terminator 2 in our worlds, I imagine we'll probably just probably let it reach that point and go, yeah, there we go. Probably the point where we just want to call time on that.
Yeah, for me, the two, you know, very different things as well. So as an asset class, you know, crypto is growing and it's becoming established, but there's so many other assets that it would take a dramatic, probably Terminator 2-esque upheaval for it to be able to do that, because it grows in line or sort of in line with other asset classes as well. There's balance, and there's reasons why people invest in one rather than the other. And then in terms of the impact that AI will have on retail banking, I think a big part of it is about that cost base and also that effectiveness. I think there's a lot of stuff for AI to do in the retail banking space because it can give advice much better. It's much more accessible. If you give it the right training and RAG, it can be much more reliable than a human customer service agent and far more effective than a more traditional linear chatbot. But I think there will always be requirements for human in the loop. There will always be requirements for some people who can't access AI in whatever way. The regulator will mandate a certain size of branch network for quite a long time, as they have been doing now. People need to be able to access their money. But I think AI has got a long way to go yet within retail banking, and I'm really excited about it because seeing what things can do and how efficient it can be in solving problems and giving advice and what have you, provided it's done effectively and transparently.
I think there's a risk that, particularly in retail payments, things get pretty confusing for customers. At the minute in the merchant checkout, you might have a BNPL product that in the UK at least is kind of an unregulated form of consumer credit. You might have a card product that offers like really extensive purchase protection, chargeback, Section 75 rights, an open banking payment that offers very limited purchase protection, etc. So I think there's probably a big case for kind of education and awareness amongst customers of these kind of new and emerging options, and it's going to be some really great times to use them where they're super convenient and a really great fit. There might be other times Customers want to use something else because it offers greater protection. So I do think with more choice and more options in the market, education is going to be a really important part of that.
Yeah. There's also an inevitability that the trend around LLMs, which let's face it, is the predominant vehicle for AI technology currently. A lot of organizations are already saying that small language models will be the sort of the next layer of this, which is rather than sort of small quantized version of super large models, which are obviously what we have today, the kind of stuff you can download to a Mac as long as you've got 64 gig of RAM. We're talking about actually small, carefully trained models that still run on large scale infrastructure, but are honed to a very particular set of tasks. And as SLMs become a potential, especially around a lot of the agentic type stuff, a lot of the unnecessary quantized patterns and references within the dimensional space that it has aren't there. It just knows its topic. And that's probably where the next logical evolution of this will come along, because then in markets with very specialized requirements or very specialized views, you are reducing its likelihood for matching the wrong thing and then saying something or hallucinating or doing the whole Jurassic Park piece about, I have gaps in my knowledge, so I'm just going to fill it with the DNA of a frog because that looks like the most sensible option. But in reality, what you get was never really a dinosaur. And I think once I did say I'd get that in. I said I'd get that in before the end with 5 minutes to spare. And logically, that's the thing about this, which is why it's so fascinating. It's so good to even be doing it even in these early stages, is because we are finding the use cases. We are getting opportunity to find the value out of it immediately. We're getting into customers' hands in lots of different ways. But ultimately, we're learning and we're taking that feedback on board and we're saying, right, this is how we fine tune it. And then as people within the space give us better options and different options to explore and to work with, we can just keep refining it and continue to do the human thing about being curious and careful.
Great. Thanks so much for the input, everyone. And now, just as we're rounding to the end, I'm seeing a bunch of questions come through. If we could be fairly, I suppose, brief as we jump on these. We'll try to squeeze them in. Maybe we won't get them all in. Let's go to Dion's question. At which point will the Terminator take over? At which point will AI become accountable for rendering financial advice, selling products, asset planning, investing, or do you think it'll always play an ancillary role alongside humans?
I think the key word there is accountable. I don't think AI can ever be accountable. And that's a sort of a misbuilding of the model and the situation. I think AI can play a primary role in these kinds of things if there are appropriate guardrails and safeguards around it, and the consumer is really, really clear around it. Like, I'm very happy to go with a robo investor or a tracker fund because I know that it's just doing what the market says. So if I know that that's what I'm getting from an AI and there's a risk around it, I think that it can very easily become that if the customer protection is strong enough.
Thanks very much, Ben. Next one from Mercy. And in answering this one, I kind of, Tom, Ben, I think of the recent FinTech accelerator. Can you share examples of how accounting firms can leverage AI in FinTech to improve audit efficiency, enhance financial forecasting, or detect fraudulent activities?
Yeah, I'm kind of obviously part of a firm that has big audit business. I'm not an auditor myself, but I've seen those guys already deploying a whole range of tools really in practice. So things like accounting policy manuals and financial reporting standards. They've built custom LLMs that help auditors navigate those standards. We've got a tool that helps tick and tie new sets of financial statements, so they can spot discrepancies from prior year, make sure things add up, make sure the disclosures work internally within the docs. Extensively used within analytics, to kind of analyze large data sets, journal reviews, etc. I think it's really a significant area, to be honest. Still, as with the financial advice case study, massive need for human intervention, exercise of judgment, etc. But in terms of the tools that really help churn the data and do some of that kind of hard legwork, then I think that's really, really powerful use case.
Yeah, just leap in there. Somebody who has been a financial auditor. I wrote 3 things down. Firstly, many of these jobs are boring, and the AI doesn't get bored. Secondly, they deal with vast amounts of data, and the AI is really good at that. And what we're seeing with Gen AI in particular is far better than humans at pattern matching, and therefore being able to identify fraudulent activities.
Guys, this has been a wonderful chat. Thank you for joining us today and spending your time with us in the audience. I think, don't have any more of these roundtables for 2025, but the 2026 calendar is getting put together. Uh, Luke, Taya, any notes on where we're going next?
Just to keep an eye on the emails. If you have signed up for this, then you might get a polite email in the future keeping you in touch with what is on the cards in terms of future roundtables. So keep your eyes on the inbox.
Wonderful.
And of course, to our panelists, if there's any way that you want people to get in touch with you, feel free to drop that in the chat before dropping off. But I'm sure LinkedIn is there. We're all on it.
How fun is it to be having this conversation when literally years ago, I remember talking to the Zappos team about no one's going to put their credit card in a computer to buy shoes. And here we are, not that long after. Or maybe I'm old. See you guys. Have a wonderful day. Thanks so much.
Everybody.
Thank you, everybody.
Cheers.